Greetings of the day and welcome to the session. So in the previous session, we had a brief introduction regarding how to evaluate the net worth of a business. Now let us read the things one by one. Evaluating the worth of a business is very important in strategy implementation. Why? What is the reason? Why evaluating the net worth of a business is very important in strategy implementation? Because we will diversify our businesses. Because what do you mean by strategies? For example, a company may be having expansion strategy. If a company wants to expand, how can it expand? It can expand through intensification, or it can expand through diversification, or it can expand through merger and acquisition, isn't it? So, whenever you follow all these things, whenever you do all these things, definitely you have to know what is your net worth before intensification and after intensification. Because you have to know what effect the strategy has created on the net worth of your business, isn't it? See, for example, if you have the same net worth before and after implementing the strategy, what does it mean? That means your strategy did not work. Because the net worth of your business, the value of your business did not develop, is not giving you the good results. That is what you need to understand. So, definitely we need to evaluate the net worth of the business. Okay. So, this evaluating the net worth is very much helpful whenever you are implementing the strategies, to know the effect of strategies on your organization, whether you are intensifying or whether you are diversifying or whether you are acquiring some other firms or you are getting merged with another firm. In all these situations, these things are essential. And various methods of determining the business worth are as follows. The first one is net worth or stockholders' equity. So in this, what we will do? In this method of net worth or stockholders' equity, we will find out the net worth of a business. How? Net worth actually represents the sum of common stock, additional paid in capital and retained earnings. See, how we calculate the net worth? We take the sum of our common stock and the additional paid in capital and whatever retained earnings we have. So, if you sum up all these things, we will get the net worth. So, what you have to do? After calculating the net worth, add or subtract an appropriate amount for goodwill and overvalued or undervalued assets. So, after calculating the net worth, what you have to do in this method is, you have to add or subtract the goodwill or some overvalued or undervalued assets. Okay. So, now you will get a sum that can be called as the net worth or stockholders equity model. So, this total provides a reasonable estimate of a firm's monetary value. Means how much the firm values. What is the value, monetary value of the firm? That can be known. And in simple way, we can understand that the net worth is the total assets minus total outside liabilities of an individual or a company. This is the simplest way of calculating the net worth, because you just subtract the liabilities from the assets and whatever surplus you have, that can be called as the net worth of the company. And there is another method to calculate future benefits to owners through net profits. What we will do in this method? A conservative rule of thumb, means the rule that you need to follow to calculate the net worth using future benefits to owners through net profits method is, a business worth is equal to 5 times the firm's current annual profit. This is one way of evaluating the net worth. How? The business worth is evaluated in such a way that the current annual profit is taken and it is multiplied by 5, multiplied with 5, then you will get the net worth of the company. This is one way. And also alternatively, you can take a 5-year average profit level. So two things you can do. You can take the current annual profit and you multiply it with 5, you will get the net worth. That is one way. Or also you can take the average of 5-year profits, 5-year profit average, and you can find out the net worth of a company. And the next one is comparative price method. This comes under market determined business worth. See here what we will do. We will just find out the selling price of a similar company. Recently a company was sold. So what was its selling price? And we are also in the same activity, we are also a similar company. So we can come to a conclusion that the net worth of our company is equal to the selling price of a company, of a similar company. Next, price earnings ratio method. What we will do? The market price of the firm's equity shares. In price earnings ratio method, what is the formula we have to follow? The market price of the firm's equity shares is divided by the annual earnings per share. So the market price of the firm's equity share is divided by the annual EPS and multiplied by the firm's average net income. Firm's average net income for the preceding 5 years. So if you do that, you will get the price earnings ratio. This is the price earnings ratio method of evaluating the net worth of your business. And the last one, outstanding shares method. This is arrived at by simply multiplying the number of shares outstanding by the market price per share and add a premium. So in this method what we will do? We will multiply the number of shares outstanding by the market price per share and add some premium amount like goodwill. So then we will get the net worth of a company. So these are the 5 ways of evaluating the net worth of a business. With that, we finish the financial management strategies. Financial management strategies, very important. Both from examination point of view as well as organization point of view, the financial management strategies are very important. Now let us pay attention to production management strategies. And these strategies are very important specifically to the manufacturing companies. Specifically to manufacturing companies which produces products. See, what do you mean by production management strategies? You need to produce a product which is quite appealing to the customers. That means customers should find a value in your product. A value in your product. That means you need to design your product. You need to manufacture your product. You need to deliver your product. You need to package your product in such a way that it is very valuable to the customer. Only then customer make a purchase of your particular product. Okay. And do you think that production is a very easy thing? No, absolutely not. Production is a very tough thing. It's very tough. Because in large organizations, making the production schedules, making production on time, delivering the product to the final customer on time, these are all very tough. Lot of things have to be coordinated. And where you construct the factory, the location, the site, the resources you use, whether you make manual production process or automated production process, the layout of your factory, the location of your factory, okay, and the operations that you perform in your organization, these all things play a very important role in the production. And research and development is another important area. Research and development is another important area which comes under production. Because see, the marketing people will go into the market and get the valuable customer feedback, and that feedback has to be shared with the production department. Because production people don't know, no? What is there in the minds of the customer, this production people don't know. Then who will go into the market and get the data from the customers? It is definitely the marketing department people. Now these marketing people, what they should do? They should share that valuable feedback with the production department, and production department should understand, and then the production department should decide about the design of the product, about the packaging of the product, about the size of the product, about the shape of the product, about the quality of the product. The production department have to decide, and for that production department have to do lot of research and development. Only after doing lot of research and development you can produce a product which is highly valued by the customers. Okay, so these all things are very, very important. That means production strategies are very important. And another important thing is, for example, either you follow cost leadership strategy or differentiation strategy or focus strategy, production strategies are very important. Because if your production expenses are very high, if your production cost is very high, then how can you achieve cost leadership strategy? Cost leadership strategy always focuses on reducing the cost of the production. So, if your business level strategy is cost leadership strategy, then accordingly your production strategy should be formulated. On the other hand, if you have differentiation strategy, if you are not bothered about cutting the cost of production, but if you are focusing on making a variety of products, unique products, then you need to have different production strategy. So what I am telling you is, your production strategy depends on your business level strategy. If your business level strategy is cost leadership strategy, then accordingly you have to make your production strategy in such a way that you need to produce goods at lower costs. Accordingly, you have to make the production schedules, you have to make the machinery, you have to use the technology, and you should always try to reduce the cost of your production, because your business level strategy is cost leadership strategy. And you have to do a lot of research to reduce the cost of your production. On the other hand, if your business level strategy is differentiation strategy, then your production strategy will be different. Whenever your business level strategy is differentiation strategy, then in production strategy we will always focus on coming out with unique products, innovative products, special products, premium products. For that, the nature of research and development will be different. So now you should understand the beauty of relationship between the business level strategies and functional level strategies. So how you make production in your company, in what way you carry out the production process in your company, it all depends on the business level strategies. That is what you need to understand. Now, what are the main things that comes under production level strategies? I have already told you the location of your plant, the level of automation in your factory, okay, and the production schedules, the installed capacity of your factories. These all things play a very important role in the production strategies. So this is a basic introduction regarding the production strategy. Now let us start with question number 12 to understand in greater detail about the production strategy. So question number 12 talks about write short notes on production strategy formulation. Write short notes on production strategy formulation. Now, for effective implementation of higher level strategies, strategists need to provide direction to functional managers, including production, regarding which plans and policies to be adopted. Yes, that is what I am telling you. That is what I am telling you. See, production is an important function of the organization. Now, the production manager has to make the production strategies. Now, can the production manager make strategies on his own? No, absolutely no. Then what he has to do? He has to understand the business level strategies, corporate level strategies, and accordingly the production manager of a company should determine the production strategy for that particular company. That is what you need to understand. This is a general point which is equally applicable to all the functional level strategies. All the functional level strategies, whether they are production strategies or financial strategies or any kind of strategies. Okay, any kind of strategies. They should get the direction from the business level strategies. That is what you need to understand. Now let's talk about production strategy. Production strategy provides a path for transmitting corporate and business level strategy to the production systems and make it operational. Again, this is also a general point. General point in the sense, this is equally applicable to all other functional strategies. That is my intention in telling that it is a general point. Now, when will the corporate level strategies and business level strategies will be operationalized? I have already told you. The corporate level strategies and business level strategies will be operationalized only through functional strategies. So, how we should make our production? Okay, how to achieve cost leadership? How to achieve stability? That all will depend on how you make the production strategies. Okay, that is what you need to understand. Now, production strategy is related to the production strategy of an organization mainly focuses on three major areas. Of course, this also is covered here. What are the three areas? The production system, operational planning and control, and research and development. These are the three major areas. Production system, operational planning and control, and research and development. That means the production strategy of a particular organization should be further subdivided into three. That production strategy should talk about the production system, the operational planning and control, and the research and development. These are the three sub areas of the production strategy. Now, production strategies have an effect on the nature of product and service. See, how you make your product, okay, that all depends on your production strategy. Do you use manual services or do you use automated services? Which one is better? So, these all will be decided by the production strategy, basing on the nature of the product or service and the number of markets to be served. See, for example, you cannot sell the same product in all the markets. There are a lot of restrictions. For example, in some countries, these carbonated beverages like Coca-Cola and Pepsi, they are not allowed to be sold with higher content of sugar in it. Because there are some restrictions in some countries. A very famous beverage, carbonated beverage like Coca-Cola or Thums Up or Pepsi, which are sold in India very much, they cannot be allowed to be sold in other countries in the same way. Of course, they can sell, but the permissible limits of sugar in it should be modified. And sometimes the product design, that also differs from country to country. So, for example, of course, this problem will be faced by companies dealing with multiple geographical markets. If you are selling your product in one particular area or region, that is okay. You need not require any modifications and all. But if you are targeting over large geographies, large number of countries, definitely you have to change the shape, packaging, size, quality of the products. And if you are marketing in those countries, and accordingly you have to change your production strategies. See, for example, Nokia is having 2 factories in India. One factory exclusively dedicated for production to Indian market and another factory to produce products that are exported to other countries of the Asian continent. Now, the design of the products, the color of the products, the quality of the products, they greatly differ. If you are making product for India, that production strategy will be different. And if you are using the same factory, but making products to Japan, then what happens? Then the production strategy, the color, size, these all things, the nature, these all will change. So accordingly, you have to decide. And the manner in which the markets are to be served. Will you go and directly sell into that market, or will you make some arrangements with the people over there? How you serve the market? Okay, so these all things also will determine your production strategy. Okay, now here one example is given. A strategy of expansion through related diversification will affect what products are offered to which market and how these markets are served. See, for example, a company decided to expand its product portfolio through related diversification. So if related diversification is the corporate level strategy, then what kind of products we should make, that will be different. For example, at the corporate level, people thought we should go for unrelated diversification. So for that, what you have to do? You have to construct new factory, because unrelated diversification means totally not related to the existing things. So definitely you need to construct new factories and you need to offer new products. But whereas if you want to go for related diversification, then the production strategies will be different. Now, the second one in production system is the operation system structure. In operation system means what? How you run your factories, how you supply or deliver your products to the customers. See, these operations is the toughest thing. This operations management or operational planning is related to the smooth running of the production schedules, the smooth running of your factories. See, for example, all the workers are ready, but there is no availability of the raw material. Raw material is not available on time. Then what happens? There will be a lot of wastage of labor hours, isn't it? So, it is the duty of the operations manager in a particular company to ensure that the right products are available at right time, at the right place, to the right people. And do you think that this is very easy? No. Operations are the most toughest things. And if the operations strategy is not properly made in an organization, okay, then the organization cannot have a smooth running. That is what you need to understand. Okay. So, the operation system structure, which is concerned with the manufacturing or service and supply and delivery system and operation system objectives, which are related to customer service and resource utilization, both determine what operation plans and policies are set. That means depending on what type of customers you are serving, in what way you want to serve them, in what way you want to deliver them. Okay, basing on all that, you need to decide the operations of your company. Okay, so now let us focus on next question. Write short notes on strategy formulation in the areas of production system and operational planning and control. Already we discussed, the production strategy comprises of 3 sub areas. And what are they? Production system, operation system, and research and development. Now in this question we are talking about 2 important things: production system strategy and operations planning and control strategy. Now let's start with production system strategy. What do you mean by production system strategy? Means lot of things are involved in production system strategy. The layout of your plant, the location of your plant, the way you design your product, the way you design your service, these all things have to be decided. Okay, so let us study. It is concerned with the capacity, location, layout, product or service design, work systems, degree of automation, extent of vertical integration and such factors. That means your production strategy depends on, first of all, the capacity of your organization. What is the installed capacity? If you have a lot of installed capacity where you are not utilizing completely, then you have to make strategies in such a way that you need to optimally utilize the installed capacity of your organization. Okay. And for example, you are getting lot of orders from outside, but you have a very limited installed capacity. Then what you have to do? You have to run your factory in different shifts. You have to run your factory in 3 shifts a day. That means 24 hours you have to run your factory. So, whether to run your factory 24 hours a day, or you will run your factory in 3 shifts or 2 shifts or single shift, it all depends on your capacity. And second one, the location. See, you should not construct your factories in far away places where there are no transportation facilities and all. So, you have to choose the right location for your product. And that all depends on, again, the nature of your product. For example, if you are making very dangerous chemicals, then you are not allowed to start your factory in towns and cities. You will be given a place which is quite far away from the locations of the people. So, the location of your factory, that again depends on the nature of your product and service. If you are making some things like soaps or some toothpaste or something like that, then you need not go for far away places and you need not construct your factory there. But on the other hand, if you make some insecticides, fertilizers or some other chemical basic things which are polymers, okay, which are quite dangerous, then the location of your factory should be quite far away from the locations of the people. And production strategy also depends on the product or service design. In what way your product is designed, okay, that you need to understand. And work systems, in what way you run your factory, okay, and also the degree of automation. See, some factories are fully automated, some factories are not fully automated. There are some automobile factories in India which are fully automated, where there will be robotic fitting, no human intervention, everything is done by the machines. And there are some factories where there will be 50-50, 50% of automation and 50% of manual processes. And there will be some factories totally run on manual processes. For example, if your strategy is cost leadership strategy, then you have to go for full automation, because only through full automation you can reduce the cost of your production. That is what you need to understand. And the extent of vertical integration. Vertical integration means what? Backward integration and forward integration. If you are into the businesses of your raw materials, then you have to make your own raw materials. And you have to make your production schedules in such a way that there is no disturbance to the availability of the raw materials. On the other hand, if you depend on outsiders for the raw materials, on outside suppliers for the supply of raw materials, you need to maintain good relations with them to ensure that there is a smooth supply of raw materials for your production. So, depending on the availability of raw materials, again we make decisions regarding our production strategy. Next, and several other factors. So, these all factors, the capacity, the layout, the location, the product or service design, work systems, degree of automation, extent of vertical integration, these all factors determine your production strategy. That means, whenever you are making a production strategy for your organization, you have to keep in mind all these factors. Only then you have to decide on your production strategy. Strategies related to production system are significant as they deal with vital issues affecting the capability of the organization to achieve its objectives? Certainly. See, I have very big plans. I have very big plans to grab the market. But I don't have the capacity. My factory capacity is very less. Then can I achieve my objective? Absolutely no. So, whenever you are setting your objectives, you need to keep in mind your production capabilities. Without keeping in mind the production capabilities, if you go on expanding, if you make a lot of trials to expand your business and if you put very big objectives, can you achieve them? No, you cannot achieve them. Because you don't have the capabilities. Without having the capabilities, how can you achieve your objectives? Without having the production capacity. That you need to understand. Now, it involves decisions which are long-term in nature and have an influence on operations capability of the firm and its ability to implement strategies and achieve objectives. See, can you handle? Of course, there are a lot of orders. Can you handle? Are your operations perfect? Do you get the raw material supply on time? Can you run your factory in 3 shifts? Or the labor available? See, these all things we need to check out, no? If the raw material is not available on time, but we have very big production strategies that we want to produce this much by the end of this month, like that you have a lot of production schedules. Now, can you achieve that objective? Can you make the production like that? Definitely not. Because your operations are not supporting your production. So, operations are very important. That is why we don't look operations and production separately. Operations also are a part of the production strategy. That is what you need to understand. Now, operations planning and control strategy. Strategies related to operations planning and control are concerned with aggregate production, planning, material supply, inventory, cost and quality management and maintenance of plant and equipment. Now you should understand the importance of operations. For production to continue in a smoother way, don't you think that these all things are very important? How can I carry out my production activity in a better way if there is no proper material supply? If there is no right kind of inventory, or if my inventory cost is very high, or I am not getting the quality raw materials, how can I make the production? So, the quality of your production, the efficiency and effectiveness of your production depends on the operations, because it is the operations department which takes care of all these things. What care? The operations department, the operations wing of your organization should focus on getting the smooth supply of raw materials, qualitative raw materials at reasonable prices. So this is the duty of the operations staff or operations manager. So if operations are failed, then automatically the production also fails. So production, your production system largely depends on operations. That is what you need to understand. See, you have a very tight production schedule and suddenly there is a problem in your machines. Okay, there is a problem in your machines. Machines are not working. Now what happens? What happens? You cannot continue with the production till the machines get repaired, isn't it? Now why there is a problem in the machine? Yes, definitely it is the failure of the operations department, because it is the duty of the operations department of your organization to ensure the perfect maintenance of plant and machinery. They have to overhaul the plant and machinery regularly. They have to replace the damaged parts, and they need to maintain the machines in a perfect way so that there will be no problem during the production process. So, production is related with producing the things, but maintenance of factory, maintenance of machines, making the raw materials available at the right time, procuring the raw materials from the right place, focusing on the quality and quantity and price of the raw materials, this is all the duty of the operations management. So, you have to understand it carefully. So, what is the final conclusion? How best you can do your production depends on how best the operations management is taking place in your organization. That means there is a tight interaction between production and operations management. That is why in MBA courses we have a subject called as production and operations management. They are not separated, they are one and the same. Actually there is difference. Production is different and operations are different. But for smoother production, operations should be perfect. If operations do not cooperate with the production, then everything will go into huge waste. That is what you need to understand. So, the operations strategies are related to the production planning. That means the production manager should talk to the operations manager. Boss, I am planning for this amount of production. Now, can you make the availability of raw materials or not? Is there any problem with the machines? Have you verified the machines? Can you get me the raw materials or not? By this time I want this amount of raw materials. Can you get them or not? I want this quality of raw materials. Can you get them or not? I need to have this level of inventory. Can you maintain or not? So this, the production manager and the operations manager should talk with each other, should communicate with each other, and they need to coordinate. Only then the production process will be continued in a perfect way. That is what you need to understand. So, the strategies related to operations planning and control comes under the aggregate production planning, the material supply, inventory that is to be maintained, and the cost of procurement, and most importantly the quality management. See, you need to procure the quality raw materials. Only then you will get the quality output, quality finished goods. And whose responsibility is it to look at the quality of raw materials? It is the ultimate responsibility of the operations department, operations management, to procure the quality raw material to be used in the production process. Okay, and above all, the most important thing is the maintenance of plant and equipment, so that there will be no problems during the production process. See, quite commonly we read in newspapers that in major factories there will be a lot of problems with the machines. The machines stop in the middle of the production, and that is a great loss to the organization, and sometimes it takes days and months to rectify the mistakes. So that should not be there. So operations management, operations team or operations manager have to look forward to handle all these things in a better way. Now, operational strategy seeks to ensure that the resources are efficiently utilized and the day-to-day operations are carried out in the light of long-term objectives. See, you have a very big long-term objective. So, you have to work day by day, to achieve that objective. And every day you have to work in a efficient and effective manner. You have to work as per the short-term objectives, and you have to reach those short-term objectives. Only then you can reach the long-term objective. That means there should be a smooth flow of activities. There should be a smooth workflow of activities. And who ensures, that is the question here, who ensures, who gives you guarantee that all the day-to-day activities at the micro level are carried out in a perfect manner? It is the operations manager. So, operations manager plays a very important role, a critical role in the implementation of the production strategies. If operations department do not coordinate with the production department, then no production can be carried out in a pre-planned manner, in a predetermined manner. Okay? Enough. Let us move on to research and development strategies. Now, do you think that research and development strategies are quite different? Is it a separate function? No. Research and development strategies also come under production strategies. It is a subcategory in production development. And research and development is very important. And there is a difference between research and development. Development means product development, making some additional features, adding something to already existing things, that all comes under development. Researching means coming out with entirely new things. That is called research. So both things are required. We need to come out with new things and we need to add the features to the existing products. So both things have to be done. And especially in the fast changing markets where the tastes and preferences of the customers are fastly changing and where there is intense competition and where your rivals are trying to come out with innovative products to grab the market and get the competitive advantage, definitely research and development strategies are very important. Because if you don't perform research and development in a proper way, you cannot come out with innovative products. You cannot compete with your aggressive rivals and you cannot carry out your business. See, how many days can you sell the same product into the market without any development or without any innovation in the product? Those days are gone where you devise a product once in a lifetime and you keep on selling the product for the years to come. Decades and decades you are selling the same product. Those days are gone. Today, see, we observe in smartphone market where there will be lot of product development. For every 6 months the companies come out with products with added features, additional features, new features. Yes, that is the order of the day. In order to withstand in a highly competitive market, in a competitive, dynamic, turbulent market, definitely we need to go for research and development. Okay, so that is the importance of research and development in the success of a particular organization. And whenever you have some differentiation strategy or cost leadership strategy or focus strategy, research and development is important. Of course, the type and nature of research and development will differ. See, for example, if you want to follow cost leadership strategy, your research should be oriented towards cost cutting. If you want to follow differentiation strategy, you have to focus on developing new things. Means the nature of research and development will differ, will vary. But ultimately research and development should be there. But how you do it, that varies depending on the business level strategies. That means for everything research and development is required. Either for cutting the costs or either for innovating new ways, for everything. Ultimately at the end of the day, research and development is required. That is what you need to understand. And this question, especially question number 14, talks about the role of research and development people, research and development personnel in strategy implementation. How they contribute to the success of the strategy implementation in an organization. So that is the concept here. Now let us read. R&D personnel can play an integral part in strategy implementation. That means they are a part of the strategy implementation process. They are not separate, because research and development is very important component to make your strategy successful. Now you can ask me, sir, without research and development, can't we implement our strategies? And the answer is straight away no. Without research and development of some sort, of some kind, you cannot implement your strategies in a successful way. That is what you need to understand. So, research and development personnel can play an integral part in strategy implementation. And these individuals are responsible for developing new products and improving old products. Developing new products means research. Improving old products means development. So, both things. That's why we call it as R&D. Both we join. Developing new products means research. I'm right. Developing new products means research. And improving old products means development. Okay. And R&D employees and managers perform tasks such as transforming complex technology, adjusting process to local raw materials, adapting process to local markets, and altering products to particular tastes and specifications. See what kind of research and development we have to do. These are the areas where research and development are very much essential. First one, transferring complex technology. That is, already a car which runs with water is made. But that is a very complex technology. Technology is already existing, but it is very complex technology. Now, you have to make more research and development to make that complex technology into a very simple technology. Because whenever, see, you can have a very complex technology in the lab, but once you want to do it commercially by setting up a factory, the technology should be simplified. So for that, you need to do a lot of research and development and adjusting processes to local raw materials. See, for example, raw materials are available everywhere, but the nature of raw materials, the quality of raw materials will differ. See, for example, you can make tiles with the clay that is available in India, but if you make tiles with clay that is available in India, you cannot get quality tiles. Tiles, you know, for flooring we use. Yeah, regarding that I am talking about. So if you want to get quality tiles, okay, you should import clay from Malaysia or from some other countries, and that will add up to the cost of production. Now, we should do a lot of research and development to make Indian clay suitable for making tiles. What chemicals have to be added, or what process, how the Indian clay. See, we have a lot of clay available here. Why there is a need to import it from Malaysia or from other countries? There is no need. But the clay that is available in India is not so suitable to make tiles. Now you need to make a lot of research and development to find out the ways of how you can use Indian clay to make tiles. And if you are successful in that particular project, automatically what happens? You can reduce on cost of your production. So in that way, you need to think. And adopting processes to local markets. See, that is a problem with COVID vaccine, no? That Pfizer vaccine, there was a contention that it may not be suited to Indian climatic conditions. So now they have to, already they made a vaccine. Now they have to find the ways of how to make that vaccine to be distributed in the Indian subcontinent. What care has to be taken? For that you need to make again research and development. And altering products to particular tastes and specifications. See, for example, you want to make a very tasty carbonated beverage to calorie conscious people. Like we have diet coke and all, no? See, making a normal coke is very easy, but making a diet coke is very tough. It requires a lot of research and development because you need to give them the same taste, but they are calorie conscious. Whenever they drink that diet coke, that should not add up to the calories. Okay, but still the same taste has to be maintained. That means you need to research on artificial sweetness like aspartame and all. You need to do a lot of research, intense research, and come out with innovative products. That is the case here. So, yes, in order to expand our business, see, for example, in the market, the calorie conscious people and diabetics are increasing, and that is a very big market, and we want to sell our drinks to that market. Okay, we want to sell our beverages to that market, and we cannot sell normal beverages. Now what? There is a lot of market there, but how to tap that? How to grab that? In order to grab that market, in order to tap that market, what is required? An innovative product is required. An altered product is required. You cannot sell them the same existing product. So you have to make some product development. You have to think of innovative ways of altering that product. You have to make artificial sweeteners which do not add up to the calories. Which do not add up to the calories, but just gives the taste. So that requires a lot of research and development, and companies are spending crores and crores of rupees every year. Now, you know, companies like Nestle, they spend more than 2,000 crores or 3,000 crores every year for the sake of doing research. So that is the importance of research in the organizations. Okay, now strategies such as product development, market penetration, concentric diversification require successful development of new products, and that old products be significantly improved. Yes, whatever strategy you may follow, whether you may follow product development strategy, for that you need to add up new features into the product, or market penetration, you want to make the existing customers to use more quantities of your product, for that you need to make research. Okay, and if you want to diversify, and that too if you want to go for related diversification, again you have to do a lot of research. See, everywhere research is required. Okay, but the level of management support for R&D is often constrained by resource availability. Yes, that is a very important thing. Whenever the top level management feels that there is some problem in the organization, whenever the cash flows are not proper, whenever the organization is getting losses, so the first function that is stopped is research and development. Why? Why don't you stop other functions? Why don't you stop marketing? Why don't you stop logistics? Why don't you stop production? Why you only stop research and development? Because research and development is an area which takes up a lot of costs, and there is no surety regarding the returns. See, I am spending a lot of money in making a new product. I am pumping in lot of funds, but I am not getting the result. I am waiting for a long time, but still I cannot get the results. If that is the situation, what happens? So that is the reason in a company, if research and development activity has to be done in a perfect way, the most important thing is a very big support from the top level management. If the top level management thinks that spending on research and development is a waste of money, then we cannot do anything. So that's why how better the research and development activity is carried out in a particular organization, it all depends on the top level management intention, top level management attitude towards research and development. And the most successful organizations use R&D strategy that ties external opportunities to internal strengths and is linked with objectives. See how beautifully it is said. If you want to be a very successful research and if you want to be a very successful company, what kind of research you have to do? First, you have to understand the external environmental factors, and also you need to understand what are your strengths, and you need to focus on your objectives. It is like a tripartite agreement. External factors, your strengths and the objectives. So you have to keep these all three things in mind, and accordingly you have to formulate the right kind of research and development strategy for your organization. That means you should not blindly carry out the research and development activities. Okay. Now, well-formulated R&D policies match market opportunities with internal capabilities. When can you say that you have a very good research and development strategy? You can say that whenever you are trying to use the opportunities in the market, and also whenever you know your internal capabilities, and if you make a research, then that research will be a successful research. Okay. Now, R&D policies can enhance strategy implementation efforts to emphasize product or process improvement. How R&D helps for strategy implementation? You can improve your processes. You can come out with low cost processes. So in that way R&D is going to help you. And the company has to decide whether to focus on basic research or applied research. That means whether to focus on the most important materials or whether to focus on some addition of features. That the company has to decide. And also the company has to decide whether it wanted to be a leader in research and development or follower in research and development. Because to be a leader in research and development, you require a lot of money to be spent on research and development. And develop robotics or manual type process. For example, if your aim is cost leadership strategy, then you have to spend a lot of money on robotic process automation. Means mechanization of the production process. Only then you can reduce the cost of production. So that you have to decide. And spend a high average or low amount of money on R&D. That all depends on the policy of the top level management. How much money they want to spend on research and development. And perform R&D within the firm or contract R&D to outside firms. See, we have a separate question regarding that. What kind of decision we have to take? Whether to conduct research for ourselves, internally in-house research, or contract research to outsiders. That also have to be decided. And use university researchers or private sector researchers. So, whether you want to outsource your research to universities or sometimes you can acquire some research firms and you can give the activity of research and development to them. So, these all factors have to be decided by the company. And these all factors will contribute to the success of this strategy implementation. So, the top level management should have a better understanding regarding all these factors, and then they have to formulate a right kind of research and development strategy that will be quite helpful in the implementation of the overall business strategy of the organization. Okay. So, we will stop there and continue with the remaining things in the next session. Thank you.